So good afternoon, Peter.
Good afternoon, Alex. Good to see you again.
Welcome to Senior Boulevard TV.
It's great to be here. Thanks for having me.
I'm so happy to have you on the platform in these very special times. As you might have heard on previous interviews, we discussed a lot about the overall opportunities. But as this pandemic continues to evolve and providing a lot of surprises, I really look forward to having you on the platform, having your insights as an expert, and what are you making out of all these turbulent times, and even moving forward. So before zooming in on that, perhaps you could start with saying a little bit about yourself, your background, the company you work for, and so forth, and then we can dive into the subject. What do you think?
Okay, great. Yeah, happy to do so. And please stop me and direct me or ask a question about any aspect of it. But yeah, so I'm Peter Robinson, and I'm the European Director for Promatura. I'm a joint venture partner in a business that's been in the United States for now 36 years and now in 11 countries. Only recently in Europe, but a lot of expertise gained in the senior living sector over many, many years, helping investors, operators, landowners, and developers understand what it is that older people are looking for when they move out of their own home and into another type of property, perhaps more suited for their needs. So independent living, assisted living, continuing care, retirement communities, and of course, memory care, as it's called. So we're a research and consultancy business giving advice, many different countries for many different years.
Mm-hmm. You mentioned a few independent assisted living, perhaps. Are there main different types, how you can summarize the different market segments, in your opinion, for our audience also to understand? Because even in different linguistic regions, people have different definitions, mean something about, and sometimes it makes it very confusing for many people. So perhaps we start with that and then dive into the whole pandemic impact.
Yeah, and you've hit the nail there on the head, as we say, Alex. So many different organizations in different countries use the same term to mean different things, which means it's very hard to draw comparisons sometimes between the types of facility in different country. But basically, we use a simple chart to look at levels of care. And it's the levels of care all the way from independent living with the need for no care. People move in from their own home, quite able, very able to look after themselves. And then they move through perhaps assisted living, memory care, nursing care requiring, end of life care. And of course, right at the beginning, you've got what we call active adult, which you find in resort communities and other areas with no need for any care. But of course, when someone moves out of their own home, they are anticipating care at some point. They don't necessarily want that in front of them or to see it or need it every day, but they want to know it is there. And so we find, particularly in the US, a constellation of communities which may be independent, assisted living, and then the need for nursing care in close correlation so they can provide those services as and when needed.
That would be then the segment of independent living, and then moving towards assisted living and other segments, and even nursing homes. That's actually the final phase. How do you in that perspective convince the people already there, especially if they don't need the care yet, or they are in this, I would perhaps denial phase, or that to take the step forward?
I think it's a number of factors. There's two key points here. One is that I think we've got this boomer cohort, the baby boomers post Second World War, who have been used to the very finer things in life. They've only seen everything progressed in a very positive way. Their lifestyle has really boomed, with income, with international travel, with luxuries, with things that you couldn't take for granted in the 1960s and 70s. That cohort is now expecting something much more in life than people who have come to age in their 60s and 70s previously. So the current model of providing what I call default care homes, a generic term for older people, you can just rip that model up. Mm-hmm. Because particularly now with COVID, the second point coming in, people are understanding that loneliness in particular is something to avoid, but to avoid loneliness in their home, maybe a spouse is ill or has died, mm-hmm. they're not ready to move into a care home. A care home is not a aspirational move. These boomers have discretionary income and they expect a far higher quality of accommodation, services, amenities, if they are to be persuaded to move out of their own home. So you have these two big issues now giving, COVID's given a catalyst to the first.
It's good that you mentioned that, Peter, because obviously a lot of people have some familiarity with the different concepts and so forth. But what I, in the first instance, perhaps would love to hear from you, and that's why I would love to split the interview in the different sections, is that what a crazy time. So many things have been happening over the last 6 to 12 months. The macroeconomic situation, what people are expecting, our governments, I mean, all the social aspects. If I would ask you, what is huge storm today that has hit our society, if you would summarize it to the major opportunities and threats that actually, and what changes it has not given to the market, could you give some from your perspectives towards that?
Yes, certainly. I think if we look at the traditional generic term of care homes, particularly in the UK, there have been many bad stories about big instances of COVID in those care homes where everything is communal. Mm-hmm. And of course, a lot of people end up in care homes by default. It's not an aspirational choice. It's not something that anyone wants to do, leaving their own home. Mm-hmm. And that's given a very great focus upon how we care for our aging population. If we look at the biggest growing sector in the UK and in the US, already in Australia, already in New Zealand, we've seen the growth of the retirement village and a focus on retirement villages where people live independently and they have their own kitchens, bathrooms. They don't need to leave their own apartment. They have everything in one place. And we've seen quite a lot more interest in people moving out of their own home into a retirement village to make a step earlier in life where they can be aging in place, care for when they need care. And I'll come back to loneliness. Loneliness is one of the things that people have really suffered with everywhere because they've been locked down. They haven't had access to friends and family other than through digital means. And that only takes you so far. And as it has gone on and on and on, that technology has enabled people to connect, but it's also reminded them of what they're missing, which is why technology is a great enabler, but it's also highlighted the issues of how far it can go. And it can never replace the importance of and the need for human contact.
Mm-hmm. Yeah. Do you think it has changed the expectations of the seniors towards the market and what they expect from an operator or a solution provider? Do you think also from the investor perspective?
Yeah, I think it has. I think it has, and I think it's really going to change in two ways. I think people's perspective on moving will become more pronounced. I think they'll be very demanding because they are boomers. As I said, they've been used to the better things in life. They think more of a 5-star hotel if they're going to move out of their own home. And funnily enough, we've seen quite a bit of movement from investors and also hospitality providers where there are distressed assets in hospitality looking to be repurposed for senior living. So it's coming in from the perspective of hospitality rather than just a care-led offering, which just reminds people of their own human failings. And that's not something anyone particularly wants to be reminded of. So I think there's a good opportunity for hospitality sectors, the hospitality sector across Europe. We've already had interest from resort owners in Southern Europe to repurpose part or all of their offering to show people, particularly in cold, frozen Northern Europe, where I speak today. I mean, we have the snow here in the UK. You don't have it in Switzerland.
Exactly today, not.
It's spring already with you.
Yeah.
But I think once supply starts to get people thinking about what they can do, and marketing pushes the information and the knowledge about what retirement living could look like, there's going to be far more interest in people making inquiries about how they could live locally, nationally, and internationally. So that's going to push, I think, a fair bit of interest further. Yeah.
Not to even mention also today, I think for the first time in history, I think also the British pound today, or the British central bank, has also shifted towards negative interest today. And we were a little bit, as I live in Switzerland, the first one to have been confronted with negative interest. That must have a huge impact today on also potential creating new products within this field. Like, are investors and operators aware of these macroeconomic shifts?
Yes, I think so. I mean, there's been a move. There's a requirement for tangible assets, asset-backed investments. There's been a renewed focus on that ever since that became the sort of default for many investors after the GFC that we saw in 2008-9. Asset-backed retirement villages, care homes, care for the elderly is something that we've seen major companies like AXA get into in the UK in particular. They've got something like a declared £2 billion worth of investment to put into seniors living over the next 10 years in 30 declared projects. We've seen Legal and General, L&G Capital, as they're called, come in and acquire existing operators with big plans to put a lot of focus into that area. And from a consumer perspective, COVID has locked down people in the UK in particular. I saw a stat that said there's 125 billion pounds worth of money in the UK that investors have saved, just not able to spend money elsewhere. And there's, trillions of pounds locked up in UK house equity to be released into the right kind of property purchases. People are right-sizing and reframing their whole life because of COVID. And I think for older people, where you've got supply and investment coming from major credible organizations like AXA and L&G, and you've got people at home, perhaps lonely, unfortunately rethinking their life goals now moving forward, I think we're going to see a lot of movement over the next few years. Yeah.
So they are integrating that more into their future business model and shifted. You normally have the classical rental and acquisition. Do you see any shifts or even new models coming into the market from an innovation perspective?
Yes, one of the issues we have is that there are so many different operating models. There are so many different ones. It's very difficult for investors to get comfortable with show me the numbers and give me the confidence that I can back a particular model. I think one of the key issues that underpins this lack of certainty is the fact that what's missing from the senior living sector on a European-wide basis is the ability or the desire even to fully understand what potential residents want and what they will really pay for it. I think there's been, at the risk of being controversial, I think there's been often a patronizing approach to providing property and services and care, either at a very high level, but over specified, so therefore the prices have to match for an investor's return, and that has seen low occupancy rates, and that has made investors not want to replicate that elsewhere, or it's just simply oversupplied at the wrong level for consumer appetite. Where you see that, investors are saying, well, we must try a different model, but based on the same specification. Well, that's also not going to work. We're seeing in the UK in particular, the potential for a entrance fee model as opposed to just purchase and rental. Entrance fee is the model used in the USA predominantly, and that has seen market penetration rates now at around 8%, whereas they're sort of 0.6% in the UK for dedicated housing for people 65 years and over. So I think a focus needs to be put on what people want and what they will really pay for it, and be forensic about that. And of course, we have the methodology to do that, because just exploring new commercial models alone without understanding what people want is crazy, quite frankly. You know, you're going to waste a ton of money, and you're not going to satisfy what people really want and need.
Absolutely. No. And also the fact that we're coming into a macroeconomic situation that basically with zero or negative interest rates, is that obviously people are being paid to borrow, and especially seniors that are an older age, they are more in an asset protection, or should I say, mentality. And obviously if they have to pay rent like interest, lower interest, they prefer perhaps to do more services than to pay for and are the investor, the people providing me, taking that into consideration when I access these type of residences?
Yeah, I don't think it's any mistake or any surprise that some of the key players are the financial services businesses with some of the key investors in the space in property for older people are some of the financial services industries with large obligations to pay pensions to people on that basis. And where can they find a stabilized income profile in order to meet those obligations for pensions? Well, the answer is to get investment into a sector that is going to grow phenomenally over the next 20, 30 years. It's going to grow amazingly because we've simply got the hard demographic fact of an aging European population requiring living support and care. Medical science, of course, has cured many of the ailments that used to take people away from their families too young. But unfortunately, medical science has not kept up with the brain, and people are living longer, but with impaired mental faculty. So how will they be cared for, and what are their requirements? So the financial services industry investing in stabilized incomes to provide for older people in property with dedicated care and services makes complete sense, because the returns they can get will help support those older people whilst being able to perhaps offset some of the costs of looking after them in those dedicated facilities.
We've also seen that in the last 2 months, more than ever, than basically how dependent we are from our care providers, basically up to the point that governments decide, let's close down our economy in order to make sure that actually our care ecosystem can deal with the pressure. isn't this also then immediately a shift in awareness that basically we have limited resources in terms of care, even informal caregiver, and that should also open the way to more operating new innovative lighter operating models, because basically we do simply will not have enough informal. Do you think that COVID has really shifted or created a more awareness about the subject, you mean?
I think it's starting to raise awareness at governmental level. I sit on the ARCO Advisory Council in the UK. That's the Associated Retirement Community Operators. And one of the key things that we're looking at is a housing with care task force, which has identified the key levers to pull in government, with lots of different government departments, whether it's the Treasury, whether it's the Ministry of Housing, whether it's the pensions and tax and welfare, because not one government department can make the necessary changes that are required. We've done this in the States, not personally. I've been with Promatura about 5 years, but we did this in the States by helping to provide key insights to the American Seniors Housing Association, ASHA. And it's only when such organizations come together as a group of operators, investors, and landowners, developers, it's only when they come together and can identify to government, hard-pressed governments all across Europe that are dealing with so many issues, and try and give them a path for how to solve the care crisis that we're beginning to see, is change going to happen. And any one person or any one organization is simply unable to bring everything that is required to make that happen. In the UK in particular, through Brexit, we've seen, unfortunately, people return to mainland Europe because they felt uncomfortable with that process here. And that means there's a shortfall of care providers in the UK. And indeed, you know, across Europe, I'd go as far to say that it's not been an aspirational career choice for many people to want to get into care for the elderly. It hasn't historically paid the right kind of money to give people satisfaction that they can afford to take care of a family in the future, as people tend to come in at an early age. But I would say that across mainland Europe, we'd be happy to help with some of the thinking and coordination required to bring together the key stakeholders to make a focus on care, so that government isn't just asked to provide more and more money, because sometimes that's not actually what it needs. What it needs is a change in regulation. It needs the coordination of government departments to perhaps come together to make some tax breaks for investors. Investors always want tax breaks. For operators to receive maybe some funding to help train a new cadre, a new cohort of care providers, maybe from the hospitality industry, which you know has the closest parallel and the greatest need to find something for these poor thousands and thousands of people who would ordinarily be working in resorts, in hotels, in high-end restaurants and bars and cafes. And you know what? They have an opportunity to earn the same money with, if not more, to provide care for our older citizens. And I think you have to coordinate to bring that together. I'm passionate about the subject. I think there's a great opportunity. I just think there's a great opportunity. I have gray hair, you know, I can see the future. I can see the future. You're not so gray, Alex. But I just think we have a great opportunity, and it's been around for years. You know, you can't deny the aging demographic in Europe. And I think COVID should give everyone cause to focus as the catalyst for this, to bring this change in care. It's
actually coming, all of us together. Obviously, our governments are being more and more indebted thanks to COVID. Our care system obviously has been made quite visible that we do have limited amount of resources. You know, at the same time, we're being confronted with, zero or negative return on a financial resource that investors have to. And obviously, we have to do this in more and more budgetary constraints. So by operating models, as you just mentioned, especially come from the hospitality sector. So there's way so many points to integrate, or opportunities to integrate. And would you say then this would be an ideal moment then also for private actors to step into the industry and actually, as an entrepreneur, seize this momentum to step into the industry?
For sure, for sure. I think it's a very good time. I mean, we're having conversations with private clients, landowners, family offices, investors, who we're working with on a sort of 6-month time frame to help them understand the sector, to help model concepts based around what people want rather than just what they've seen down the street or down the road or think that people want. You know, we're typically taking a 6-month view on getting them ready towards an investment memorandum whereby they can go out with concepts, put some money in and attract other investment. And that's an exciting time. It's an exciting time. We've got clients taking this approach in Portugal, Spain, Cyprus, the UK obviously is taking a very big movement in that direction. And on that kind of time frame, you can learn a lot. You can also then make yourself investable or be comfortable that the income streams that you want and need to justify that investment in the sector will yield the return that those investors seek. I always counsel people that come to me with the words, look, this really is an operating model. It has the chance to produce a nice stabilized income profile over many, many years. If you get it right and you localize what you do, you can build a nice portfolio that you will sell on to perhaps a financial services provider or into further private equity, later stage venture capitalists. So there is a good model. We're seeing a good model for investment that we're helping investors take.
Yeah. Before we zoom in the next session on the operating models and how Promatura function, perhaps a last question about what's coming from us. Do governments today, you must see a big difference between government that do realize their role. Sometimes perhaps others think that they should take control of the entire opportunity. Do you see a large difference in government involvement into this process today?
It varies around Europe from what I'm hearing. It really does vary around Europe. I mean, you have in the cantons of Switzerland 27 different views or something.
26.
26. I gave you an extra one.
Yeah, exactly.
Sorry.
The federal one, the federal level one.
The federal. There you go. Thank you. Good save.
Good.
I think. Look, you see where it's devolved to cantons in places like Switzerland. You see a left-wing view or a right-wing view. In my view, if we look at where government steps in, it has to be down to a price, which means it pushes it into a default, sometimes unattractive option where people are staying in houses longer than they should do, either because they don't like the options elsewhere. I think private equity's got a big role to play, and I think it could work with government to make retirement living options far more attractive for people to consider before they need it. Because really, when you're living in your own house and you're master of your own estate, your own castle, as we say, if you're going to move, it's only because you think you can continue living the life that you love now somewhere else. You don't want to downgrade any aspect of your life. Certainly in the UK, we've seen a reduction at council level, where we see at regional council level, the amount that the council will pay towards a care home has just dropped away and dropped away and dropped away. It's fallen because the budgets will only go so far. So what happens is then care is provided at a lower level. Staffing numbers have to take a hit. We see that people with just £23,000 worth of savings have to liquidate everything over that to help pay for their care. So it's a very low level. They have to divest of all their assets in order to pay for that care. And so I'm afraid that might see a race to the bottom in quality. So again, I don't think we should be asking as an industry of government, either local or federal, to just pay more. I think we help private equity to understand the real requirements of what people want and what they'll pay for. And we ask government to smooth out the road in terms of regulatory and statutory obligations around care and around planning consents in order to make that equity be able to be deployed for the ultimate benefit of the resident. And then the investor will make a good return and government won't have to work so hard or ask the taxpayer, a reducing taxpayer base in many countries now with a reduced birth rate, in order to pay for it all.
No, and I think obviously for an organization like you, it's important to see which governments are really leading this in this aspect. Others are a little bit more lagging, and how can benchmarking can happen between different regions or countries, and where we see the biggest trends happening, I can imagine. So I think that must be an incredible challenge, especially post-COVID, for organizations like Promatura to have a finger on the pulse.
Well, do you know what? We are looking at a multi-country research program right now. We are running some research in the US, Canada, the UK, Portugal, Spain, hopefully a little later this year, perhaps in some other countries as well. We must talk about Switzerland and Belgium, Alex.
Absolutely.
And we are looking at the key aspects of non-residents of any kind of facility. So we're going to talk to people who are older but living in their own homes. And we're going to engage with them in a little research that we're going to do that really gets into the detail about what their options are and how they see them reacting to those options, either staying at home, getting in care, moving out to a care home, a retirement village, and all the other aspects that they have around property for later life living. And we've done this in person. We've done some beta research, or rather we've had some research that we've done to pilot this. We've done it in person. And one of the key things that we found is that people really get a lot out of engaging in the process, but they really don't know anything about it. They've put it off as something to consider. And we're excited about what we're going to get in terms of data out of those countries to help the stakeholders in those countries understand what people want. And then we'll be looping it all up for international comparison.
Yeah, no, that's excellent, Peter. Because if you don't mind, on this particular side, I would love to zoom in on this aspect that you just mentioned. Next week, I would really love to dive in on the aspects on basically what the activities of Promatura are, how you actually are capturing this information and providing these insights towards investors. To then in the third video, zooming exactly on these aspects. Today, I really would love to how this COVID has hit this industry and what can we expect. I think we went through really nicely towards that. Now, next week, perhaps zooming into the more Promatura activities and how you actually are able to assemble this information. And the third part, I would love to zoom on this interview initiative across countries that you just mentioned.
Be my pleasure. Be my pleasure, Alex. Thank you.
Thank you so much for this part already, Peter. And I really look forward to zooming in on the activities of Promatura next week.
Thank you very much, Alex. Thank you.
Thanks a lot, Peter. See you next week.
My pleasure. Bye-bye.
Bye-bye. Bye-bye.